Hello and welcome dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is July 20 and we're starting from euro-dollar pair with Jakub Novak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.1209 coinciding with the drop at the MACD line from zero prompted a sell signal that resulted in a price decrease of about 30 pips. Declining inflation in the euro area and mixed reports on the US construction market put pressure on euro-dollar pair, leading to sideways trading during the afternoon. Today, reports on the ECB's current account balance and consumer confidence indicator will be released, where poor data will likely cause further decline in the pair. The economic forecast from the European Commission will not have much effect on the market. For long positions, buy euro when the quote reaches 1.1225. and take profit at the price of 1.1256. Growth may be seen in the case of positive statistics from the Eurozone. However, when buying, the MACD line should be above zero, or rising from it. Euro can also be bought after two consecutive price tests of 1.1206. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.1225 and 1.1256. For short positions, sell euro when the quote reaches 1.1206. and take profit at the price of 1.1166. Pressure will increase in the event of poor data and negative economic forecast. However, when selling, traders should make sure that the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.1225. But the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.1206 and 1.1166. The next stage of our review is the next major, GBPUSD. This trading plan is presented by Petar Ikimowicz. GBPUSD has been trading downside, as we expected, and the price has reached the second downside objective at the price of 1.2980. But Petar sees potential for the third objective to be in play. Due to the strong downside momentum and the breakout of the rising trend line in the background, Petar sees potential for the further drop towards lower reference. Downside objective is set at the price of 1.2850. Stochastic oscillator is showing fresh downside flip, which is another good sign for the further downside movement. Key resistance is set at the price of 1.3125. What about cross-currency pairs? Here is CAD JPY. Arif Makmar describes. If we look on the daily chart of CAD JPY commodity currency pairs, it seems stuck on its weekly bullish fair value gap. which act pretty well as the current support level, so as long as there is no downward correction that passes below the level of 102.13, CAD JPY still has the potential to rally upside in a few days ahead to get the liquidity parked at the level 109.49, where it's confirmed by CCI, which manages to break upside to the level -100, 0 and 100, as well as the appearance of the hidden deviation between CCI indicator and its price movement. And finally, here's Laurie Bailey with USD JPY pair forecast. Let's have a look. Yesterday's rapid rise of the USD JPY pair by more than 80 points was suspiciously covered by a black candlestick this morning. This was aided by the morning release of Japan's balance of the trade data for the June. The trade surplus came to 43 billion yen compared to a trade deficit of 1.37 trillion in May. However, the price's consolidation below 138.78 paves the way to the target support level at 135.15. It consolidated below this mark on July 13th, which turned out to be false. The second attempt may be more reliable. The Marlin oscillator has left the oversold territory, and it's now entering a new wave of decline. Retesting the 140.35 mark will not change the overall bearish picture. Consolidating above this resistance level will allow the price to rise towards 142.30. On the 4-hour chart, the MACD line became the focus. It prevented the price from extending its growth yesterday. The Marlin oscillator is decreasing, indicating a short-term downtrend. We are waiting for the price to settle below the level 138.78 on the H4 timeframe chart. That's all for today. See you online soon. Good luck.